Welcome to Security Token Insight, brought to you by the Security Token Academy. The security token industry is here, and it'll provide a key foundation for the evolving financial internet.
The Security Token Academy provides insights about this new era for security token enthusiasts, investors, and issuers. The security token industry is here, and you can get involved.
Hi, I'm Adam Chapnick.
And I'm Amy Wan. Coming up on today's episode of Security Token Insight, in your security token investing news, details on actor Wesley Snipes' STO. Plus, we've got an expert interview with the co-founder of StartEngine, Howard Marks, and highlights from our security token meetup in New York City. That and more is coming up on this episode of Security Token Insight.
Now it's time for your security token investing news. We begin with actor Wesley Snipes, who has teamed up with Liechtenstein Crypto Assets Exchange to tokenize a movie fund. The Daywalker Movie Fund is looking to raise $25 million through a fully regulated STO. The fund will invest in movies and TV shows produced by Snipes and his production studio. Investors will receive a portion of the profits from the fund's productions. In other news, Republic has launched its first ever security token airdrop. Under the token purchase agreement, investors in Republic-launched projects will receive a certain amount of security tokens to be redeemed at a later date. The first airdrop is for Althea, a decentralized internet system that aims to replace traditional internet service providers with a community-based network. And finally, earlier this year, we told you about the Merge exchange being the first national exchange to list security tokens. Now, the official stock market of the Republic of Seychelles is opening up investing to accredited investors in the U.S. Merge has partnered with Prime Trust to make this happen. Prime Trust will be providing custodial services with the help from U.S. broker-dealer Jumpstart. By the way, Prime Trust is a gold corporate member of the Security Token Academy. To learn more, go to our website, securitytokenacademy.com, click on the Directory tab, and then the Corporate Member button.
Have you listened to our latest podcast? Episode 5 of the Security Token Stories is out right now. In this episode, you'll hear from Luc Falimpin. Luc is the CEO of Tokeny, which is a Luxembourg-based tokenization platform for regulated securities. Tokeny is a technology provider and end-to-end platform to issue, manage, and transfer regulated security tokens. In this interview, Luc walks through the Tokeny platform and where Tokeny is seeing the most tokenization demand right now. Here's your preview.
Before we get started learning about Tokeny, you told me previously that your first exposure to blockchain and Bitcoin was way back in 2011 when you were a student and you wanted to invest money in Google, if I remember the story correctly, but you were having trouble making the investment. What's the story there?
Yeah, exactly. I wanted to play a bit with my money. I had like 1,000 euros at the time, and so I wanted to invest. And one of the options to invest was to buy some Google shares. So I opened a new bank account for this, but the fees were way too expensive. So finally, I didn't even do it. By searching on the internet, I found Bitcoin, and it was very intriguing. And I was in control of what I was doing, my investment. So I booked a few Bitcoins, and really it opened my eyes. Of course, now the banking system evolved a lot with the neobanks, digital banking, and so on. I guess today it's way easier. But yes, I saw the opportunity at that time, and I started to play with a wallet and with crypto pretty early. So it's still very useful today.
Yeah, you're certainly one of the earliest that I've interviewed to blockchain and kind of getting exposed super early on. Your first big startup was outside of the blockchain space, though, right? So after you were a student, you decided to kickstart a company where you were building AI technology solutions for e-commerce. I think the company was called Iceberg Marketplace. What were you building at Iceberg, and how did that experience kind of kick things off for you at Tokeny eventually?
Yeah, indeed, we started with AI for e-commerce, and very quickly we built a very strong API for online marketplaces. So basically, with this technology, we are able to transform any website in a multi-seller website. so in Amazon basically. So we are providing the technology to connect third-party sellers, thousands of third-party sellers with millions of products, updated every minute and so on. So it's very useful today at tokenize, all of the skills and expertise I got from Iceberg, because you had like a big API, transactional API with different stakeholders using different interfaces on top of this centralized system. So we have a lot of similar elements today in our architecture, in our technical architecture.
Yeah, there's a lot of parallels to what you're building.
Exactly, and also 2 years ago when I sold my shares in Iceberg, I was like, okay, why everybody is talking about decentralized marketplace with crypto and blockchain? Whereas for the last 6 years, I was selling online marketplaces, centralized ones, and it's very good to be the centralized marketplace in the market. So it was quite intriguing, and I started to read a lot about blockchain and the world techno. Very intriguing, very interesting.
Once you started kind of getting exposure to decentralized marketplaces, how soon before you got involved? Was it kind of security tokens right away? Were you focused on other crypto assets and crypto asset marketplaces at first? I guess how did that translate into eventually building the project that you're building now at Tokeny?
So I had some background in finance as well because I studied in a business school and then managed a company. And my partner, Daniel Coer, has a lot of experience in the financial industry as well because he worked at Clearstream and in other big companies in the finance industry. So we knew about finance. We knew this technology will totally be able to disrupt this industry. So the initial vision was to do security tokens or tokenized securities. But of course, the market was a bit, it was just the beginning. People wanted ICOs. So we were like, okay, let's start with ICOs. It's a perfect MVP actually.
Sure.
Because it was simple ERC20 tokens, simple compliance. We always did KYC, but it was gray area. So it was simple KYC, let's say. And a very high demand on the market. So we started with that. In 3 months, we launched the platform, monetized it. We grow the company, the tech team, and it gives us the resources, human resources, and financial resources to build a very strong platform for security tokens. And that's what we are selling today on the market.
That's great. So, Luke, what is the quick elevator pitch for Tokeny solutions today? At a high level, what problems is Tokeny aiming to solve, and what are the types of solutions that you're building to solve some of those problems?
Mm-hmm. So Tokeny is a white label platform to issue, transfer, and manage tokenized securities. So basically, our job is to represent assets, financial assets on the blockchain. So we are a tech provider. We provide technology tools. We are a toolbox for financial institutions to benefit from the blockchain. So basically, we don't reinvent the blockchain. We use mostly public blockchains to represent assets. And we, with our set of solutions, we enforce compliance, we provide automations, transferability, and so on. All of the advantages we can get from the blockchain without the complexity. So we provide nice interfaces, business workflows. When you use our systems, you don't have the impression to use blockchain, but you have the full power of the blockchain behind.
So you're building solutions for things like issuance and compliance. You're building solutions for ongoing management and servicing. You're building solutions for transfers on chain. You're plugging into partnerships that will allow Tokeny powered security tokens to trade on secondary exchanges. Maybe we can walk through each stage and have you just kind of quickly explain how Tokeny is building these solutions for both issuers and investors throughout each stage of a security token's lifecycle.
Yeah, yes, for sure. So first of all, it's important to say that we are a white label platform. So we work with issuers or multi-issuers. We will provide the technology, but it's branded with their own brands, our logo, colors, and so on. But everything is provided by us from a tech perspective. So the first set of solutions we provide is about the onboarding of investors. So basically, it's like an e-commerce cart. You can onboard your investors in a very user-friendly way. But of course, it's about securities, so it has to be compliant. And you cannot onboard an accredited investors from the US same way as you onboard a retail investor from Europe, for example. So depending on the profile of the investor, individual, company, with jurisdictions, the amount you will invest and so on, you have to follow different workflows. So we manage all of the disclaimers, the different workflows, different documents and information we will need for the KYC and AML purposes. So all of this is managed by the platform, and it's a white label turnkey website for the issuer.
When you say white label, are the issuers that are approaching you to power their security tokens, is it really important for them to have that direct brand exposure to investors during this whole end-to-end process? Is that why you're positioning the platform as this white label solution?
To listen to this podcast and many more, go to our website, securitytokenacademy.com, click the Interviews tab, and select Podcast. By the way, Tokeny is a gold corporate member of the Security Token Academy. To learn more, go to our website, securitytokenacademy.com, and click on the Directory tab and then the Corporate Members tab.
The Security Token Academy is proud to present an expert interview with Howard Marks. Howard is, of course, the co-founder and CEO of StartEngine. StartEngine is the largest crowdfunding platform in the United States and is also a FINRA-approved broker-dealer. The company is a gold corporate member of the Security Token Academy. I sat down with Howard to discuss the steps to launching a successful campaign and more in this expert interview. Take a look. What are the actual steps if someone is working with you to get started launching a campaign?
Well, we believe it's pretty simple. However, it's not easy. But the process is they contact us, they go on our website, let's say startengine.com, they fill in some questions, we have a conversation, and once it looks like they're interested, they sign an agreement with us, and then we onboard them. The onboarding is where it's not that simple. That means legal documents, financial documents, quite a lot of information needs to be given to us. Mm-hmm. We try to make it easy with a beautiful website, onboarding, it's simple, and yet it's the first time they do it. They're doing it, they need hand-holding, and we offer that with our account managers. They get a lot of hand-holding. Once they're kind of ready to raise the money, we have a crowdfunding strategist, the crowdfunding strategist, who's going to go in and work with the company to figure out the strategy. What are the steps from communication, working with their existing audience, building an audience, finding an audience, advertising, PR, all those components are part of a campaign. And the campaign strategist will put it together and work with the company.
Amazing.
Once it goes live, it gets implemented as they raise the money. Let's say they are successful, they raise the capital they were looking for. At that point, we're done.
That's amazing. I didn't realize you guys have that hands-on sort of intermediate approach where you kind of mentor them through the entire strategy process. That's fantastic.
The companies need the expertise. It's the same way as if I said, hey, this new thing called social media, let's work together on it. Well, for many people at the beginning when Facebook was early on, they did not understand how to use it. And some, I would say, companies came out very quickly into the marketplace with expertise on how to help companies get up to date with it.
Yes.
And in a way, our role here and expertise is to help companies understand how to raise capital for their company, which is pretty important, directly from the public using equity crowdfunding, which is what StartEngine is doing.
Got it. Okay, so what about from the other side? What's the experience from the investor's point of view? Countless people I know who want to get into early stage companies but don't know how, where, what to trust, how would they get involved as an investor through StartEngine? Is it an easy process? Do you recommend a slow process? How does that go?
So typically, a potential investor will hear from us from the company. The company is going to do the marketing, and they will get to the campaign page on StartEngine.
The company, you mean the issuer or the
issuer.
company? Okay, got it.
The issuer will, I call them companies.
The company.
Because it's a little less technical.
Yes.
And they will market themselves on Facebook, on Instagram, on public relations, Google, all those different channels, email, mailing lists, and these investors will come to our page. And they'll be introduced to the company's offering, but also to StartEngine. And they click, let's say, invest, and now starts a process where they have to put in their information. And they can use their bank account, they can use a credit card. For the smaller offerings, the $1 million rule, they can use also crypto to the Bitcoin, Ethereum, to the extent that the company is willing to accept it.
Got it. That's great.
And all of this we've designed to make it really easy, very easy for an investor. And once they complete the process, then the money goes into escrow, and there's a whole process for understanding if it's the right investment, if all the different details.
And in both your Reg CF and Reg A Plus, there's no accredited requirement. It's Main Street, retail. Anybody can invest that's interested, correct?
That's correct. So the reason I wanted to do it and decided to go forward and do what we're doing here with StartEngine is only because now ordinary people are able to invest. So think about this. Before the Jobs Act, first of all, you couldn't publicize online any of this stuff.
Right.
Okay, so what? Only wealthy people or experienced investors were able to access those interesting companies. That's great. That was then. The new is now everybody can. And that's what made me really interested in doing this, the democratization of capital. The idea that anyone can go in and make an investment feels great. Now, we also understand it's highly risky, is very speculative. The risk of loss of the investment is there. And yet, people want in. They want in because the journey, because the perks, because what the company is trying to achieve. They want in. And we want to help that happen.
Yeah, that's great. So what happens, you say sometimes it's well, it's always risky, but sometimes obviously the risk, it doesn't pan out. What happens if I guess before it doesn't pan out, what happens if a company doesn't reach their funding goal? What's the mechanism then? Do they keep the money that they did raise? Do they return it?
Well, if a company doesn't meet the minimum goal, then the campaign ends and the investors get their money back.
They get it back. Got it. And so, what happens in the end to people who have there been any positive outcomes with companies that maybe it didn't work out in the end, where they took investment, they went as far as they could, and it didn't work out? Are there is there anything beyond? Oh well, you're just out of luck. Do you find any repeat users that people come back and raise for another company? How's that been panning out in the marketplace?
Well, typically, if they fail their campaign, there's a moment of retrospection, trying to say, okay, what happened? Why wasn't I successful when so many others are successful? That's really on the entrepreneur to figure out.
Absolutely.
We don't provide advice on the business in general. We help them with the capital needs. To the extent they want to come back and try again, fine.
Great.
That's great.
So back on the investor side, is there a minimum or a maximum that an investor is allowed to invest, either because of your rules, the issuer's rules, or the SEC?
So the company will decide what the minimum is. So some are saying $100, some $500, some $1,000. It's kind of that range. In terms of the investor ability to invest more, it depends on their profile. So for the $1 million rule, the rule is very simple. It's 5% of your income or assets with a minimum of $2,000. So whatever is greater, $2,000 or 5%. But that's across all the deals in 1 year. So if you invest in two deals, your 5%, let's say it's $5,000. So you can put up to $5,000 in multiple deals, but that's it per year. And that's the company, the investor will say to us where they're at in their process, and they have to disclose it. Under Regulation A+, it's 10%, and it's in that deal. So 10% of the income, 10% of their assets in that one deal. Now, for those, and then for the $1 million rule, the maximum is a $100,000 investment. No one can invest more. And the way it works is if you're accredited, which means you're wealthy, you have a lot of assets, you have a lot of cash, you still are limited to $100,000 with the regulation crowdfunding, the $1 million rule. But with the regulation A+, there's no limit at that point for those wealthy investors.
Got it. And then how can they transact? You'd mentioned that in the Reg CF, they could use crypto. In Reg A+, that's not allowed, correct? Is it credit cards? Are people wire transferring? Is it all of the above?
Most people are choosing credit cards to invest. It's convenient.
Get the points.
They get the points. It's very simple.
Interesting. And so is the crypto allowed in Reg A+ or not? You can.
Well, that's the broker-dealer that we have.
Yes.
We don't have the permission to accept crypto, but a company can have their own offering on their own website and accept crypto to the extent maybe another broker-dealer was able to get that approval, then they could do it too.
Got it. So how about some of the campaigns? Can you discuss any of the success stories? How many of you guys helped get funded?
So we've helped over 200 companies.
200?
Over 200.
Amazing.
Successfully.
Wow.
Raised capital, over $100 million was raised. We're trying to instill in our companies a behavior. And the behavior we call is always be raising. ABR.
ABR.
And why ABR? Yeah. It's very simple. So we feel that companies have capital needs on an ongoing basis. And the old school, the old ways of doing it is you raise, let's say, $1 million, and then you have to build, make metrics, get metrics, go back and raise more. And by the time you go back, maybe you're down the line, you're about to end your capital, your cash. And we see that all the time. And then you raise another, let's say, $5 million, and you repeat the same behavior, and then you get to a point where you only have a few months of cash and you're desperate to raise more money. We think that's not a good idea. The best idea is you put your first $1 million raise on StartEngine, you raise as much as you can, you continually raise. If you don't get to $1 million, keep raising. Keep raising, even if it takes you a year. So what? Keep raising, keep engaging the customers, keep getting more capital. And then when you get to the regulation A, same behavior, keep raising, don't stop, never stop, keep raising. Your company's doing great, the price of the share is going to be higher. Keep raising.
Interesting.
Don't stop. And we believe that's a formula that will give the companies more success.
We have the full interview with Howard on our website. Be sure to check it out.
Did you know that you can get the latest industry updates in our free weekly newsletter, the Security Token Edge? The newsletter is packed full of insightful information about the security token industry. To subscribe and get your free weekly copy, go to securitytokenacademy.com. We also invite you to check out the digital wrapper on Medium. It's our new behind-the-scenes series with the teams building out the security token industry. These are in-depth interviews covering a wide variety of topics. You can view these when you follow us on Medium, and you can find more information on our website, securitytokenacademy.com.
Now live on the Security Token Academy's website, a new expert video series, Global Capital Markets and Security Tokens, with David Weild. Part 1 covers the state of the market. David is the founder of Weild & Co. and is the former vice chairman of NASDAQ. He's also a 30-year veteran of Wall Street. In this new series, we cover the growing intersection of security tokens and traditional finance, as well as the benefits of tokenization. Here's your preview. What are the applications of security tokens? How do they fit in with today's finance world?
Well, I think first and foremost, I think we're going to be able to strip out costs from the issuance of securities and the trading of securities in general. And when you do that, you also enable certain kinds of securities that heretofore have probably been cost prohibitive. And what I mean by that is I think the frequency of distributions can be increased very significantly. Why is that important? It's important because retail in particular values higher frequency distributions. So if you look at a traditional bond, it may pay twice a year. If you look at a closed-end bond fund, there are two forms, ones that pay quarterly distributions versus monthly. The monthly ones that trade on the New York Stock Exchange and NASDAQ actually trade at about a 4 or 5% premium to those that pay on a quarterly basis. So I suspect that what we're going to see is the tokenization of certain kinds of assets in a way that they will pay weekly distributions, maybe even daily distributions at some point.
That's interesting. It'll be interesting to see how that curve is shaped when you go from quarterly to monthly to weekly to daily in terms of the premium you were describing. What do you think about that?
Well, if you're a retiree, you're gonna live week to week. You're managing your budget that way. So having something actually hit your account, a distribution hit your account on a weekly basis, is something that I think that retirees would really value. So I think it will happen. I think it's just a question of time, and I think that it will be highly valued by at least some subset of the market.
Yeah, no doubt. So why is this a preferred method as opposed to issuance of traditional securities? What benefits did the security token have over a traditional security?
Well, you can hold it directly in a cyber wallet if you so choose, as opposed to through a security, traditional security account, which would be held by a broker dealer. But I think that the real advantage is that there are a number of, in certain markets, there's an application layer that is wedded to the token. And so, for example, you can automate all of the legal and compliance checks that are done in private markets to be able to trade securities in private markets, stripping out a lot of the cost and some of the constipation from having tokens or securities, if you will, move from the hands of one investor to another. So there's a big uptick in ease and efficiency for certain kinds of applications, and so my suspicion is that that's where we're going to see most of the early adoption.
What are some of the real-world uses where security tokens offer an advantage over traditional securities?
Well, if I was to apply it to asset classes, if you drive down the cost of tokenizing or securitizing an asset, for instance, we might be able to, we've already actually seen the beginning of this, tokenize a particular building. And it would then allow, instead of somebody having to buy a basket of buildings through a real estate investment trust, you might be able to actually say, okay, here's an interest directly in the Empire State Building or in a tower, the Sears Tower. So you can then, the old cliche, which is, location, location, location. It will actually allow investors then to put together portfolios that are very much location-based type of real estate. So, for example, whether it's warehouse facilities or multifamily office or multifamily residential or office properties. And so as a consequence, I think it will create greater overall efficiency of capital allocation to the real estate market. So I think it's the beginning or the dawn of a brave new world in certain types of asset classes, as opposed to forcing you to buy a big basket of properties where you don't have control over the actual building selection within a portfolio.
Got it. Now, when it comes to issuers, what do you generally recommend? That an issuer issue a security token or start with a traditional security and maybe tokenize later? Be sure to check out this new video series on our website, securitytokenacademy.com.
The Security Token Academy held another successful meetup, this time in New York City, and we want to thank everyone who attended. We had a big crowd inside the Sunset Terrace at Chelsea Piers. Security token experts and financial service professionals were on hand for an evening of informative discussions, networking, food, and drinks. I also moderated a panel discussion that included our professional and corporate members. We have an incredible panel here tonight with, regulatory and legal experts. They all know so much more than myself. There's this evolution towards now tokenizing equity as opposed to, some sort of network utility token. Why has that been the trend, this tokenizing equity thing, and is there still even an appetite for utility tokens?
I think one rationale or argument would be that it's a much safer route to take. If you're a non-blockchain business and you're looking to raise capital, but you see the value proposition of digital asset securities.
The biggest thing that I see is that basically regulators started to take notice, and it's not the wild, wild west anymore. And so I think it's not a bad thing.
And I think that the SEC, as you noted, also started to take notice and started to say, well, we haven't really seen a token out there that isn't a security, because they all look like you're building enterprises to us.
When you look at assets that may already exist and the securitization of those in a digital concept, it's easier for conservative businesses who are trying to adapt to it to understand, oh, it's a security.
Can we give the panelists a huge round of applause? We want to thank all of our corporate and professional members who attended the meetup. To learn more about our professional and corporate members programs, visit our website, securitytokenacademy.com, and click on the membership tab.
I want to remind viewers that if you have any questions about security tokens, be sure to email us, and we could answer them right here on a future episode of Security Token Insight. The address is insight@securitytokenacademy.com. Be sure to include your name with your question. One more time, the address is insight@securitytokenacademy.com.
All right, that's it for today's episode. Be sure to follow us on Twitter, Facebook, Telegram, and Medium. And do not forget to subscribe to our YouTube page so you don't miss out on any of our videos and expert interviews. And a big thank you to our Platinum Corporate member, Merrill Lynch, and all of our Gold Corporate members as well. We invite you to learn more about our corporate members by clicking on the Directory tab and click Corporate Member. I'm Amy Wan.
And I'm Adam Chapnick. For everyone here at Security Token Academy, thanks so much for watching. You want to learn more about our corporate members? Visit our website, securitytokenacademy.com. Click on the Directory tab and select Corporate Member.